Hello, everybody. Tim McCormick here, and you are on Finance Agents Live. Thank you guys for dialing into our show. Very excited about our show today. My name is Tim McCormick. I'm accompanied today by Rhoda Flum, like flamingo, right? Who runs our term loan division and jack of all everything, jack of all trades. We're also joined today by two people. Double bonus for you. We thought we were going to have one special guest. We have two special guests from the SBA on with us right now, so we could talk about SBA disaster recovery loans and all the different types of support that are available to people in the affected areas, which are actually more than you might think. Of course, you're thinking Houston and Florida right now, but there's a lot more than that. So we're going to be talking about that generally. But so we're joined today by two people, Richard Jenkins and also Mark Randall. Mark Randall, thank you guys for coming on. Appreciate it.
We're happy to be here, Tim. Thanks for having us.
My pleasure. Awesome. Okay, so what are both of your titles, if you don't mind, just so I make sure to get it right?
We're both public information officers for the SBA's disaster office.
Disaster office. Okay, excellent. Well, you guys are probably pretty busy right now, I would imagine, right?
We are. We're very busy. We're both in Houston working on Hurricane Harvey, but our agency's responding to not only Harvey, but Irma and preparing for Maria, plus there are assorted disasters still going on throughout the country that need our attention.
Right. Now, you said you're in Houston. Are you physically in Houston right now?
We are.
Okay. Are you guys at an office, or are you in one of those mobile offices? What's it like down there right now?
Well, we're in a van going from place to place and meeting to meeting. So
wow. Okay.
Bear with us. We're on a cell phone, but that's the best we could do.
No, that's great. We really appreciate you guys coming on, and it's really good that you're here because we're going to be broadcasting this to people who potentially need help or other people that can bring other people to you. We have a large network of people that help people get funding and that are looking for financing, and we're getting a ton of requests in your area, so we really appreciate the assistance. So when you say you're going from meeting to meeting, who are you meeting with? Are you meeting with individual business owners, or you're meeting with FEMA? What are you guys doing?
Well, the way the federal government's response works is anytime there's a declared disaster, which of course Harvey is by the president, not only is SBA's assets and program made available to help businesses and homeowners and renters recover, but FEMA is down here in force too, and they're the overall federal coordinating agency. What we have is a low-interest loan program that is really the federal government's primary source of money for the long-term repair and rebuilding of disaster-damaged private property. And as I mentioned, even though we're the Small Business Administration, we not only help businesses of all sizes and private nonprofit organizations, but we also help homeowners and renters with low-interest loans to help them repair or replace their lost property. In fact, about 80% of our loans typically go to homeowners because simply there are more of them than there are business owners.
Okay.
And so what we want to do is we want to get people to apply for our program, and we're going throughout the community talking to elected officials, business organizations, homeowners associations, town hall meetings, Rotary clubs, Elks clubs, Lions clubs, chambers of commerce. You kind of name it, and we're there. We have dozens of public information officers on site in the affected areas that are going to all of these meetings on a daily and nightly basis. So we're seeing as many people as we possibly can. And for those of you that may or may not know about the federal government's response in an event like this, typically FEMA, the state, and with input from SBA establish what are called disaster recovery centers throughout the impacted areas. And those are one-stop shops where people or businesses can go in and talk to FEMA representatives and sit down, and more importantly, sit down with an SBA customer service representative who will walk them through the application process. And that's done online through our electronic loan application, but we sit across the table and talk to the applicants one-on-one and guide them through the process so they can make the application while they're with us.
Okay, that's great. Well, then you guys are doing a lot of good work, and we appreciate that. How long do you think that you personally are going to be going around, and are you're going to exclusively stay in Houston for now? How long do you think you'll be there?
Actually, it's really not about one individual and how long that particular individual is going to be in an area. We have hundreds of people that will be here for the long term, many weeks and months until the job is completed. And as you know, this is an event that is unprecedented in Texas, and it's rivaling the size and scope of Hurricane Katrina. And then on top of that, you add Hurricane Irma, and this is shaping up to be the largest event in probably history.
Right. It's been a crazy year, that's for sure. Are there still disaster recovery centers functioning in Louisiana from Katrina 10 years later?
No, those disaster recovery centers have long since closed. There is still a presence probably from FEMA working on public assistance projects that affect infrastructure and that sort of thing. But 12 years on, the footprint there for Katrina is significantly and vastly reduced. Hurricane Harvey, Hurricane Irma, those projects will be going on for years to come, but at some point, as with all disasters, eventually they'll close out. When that will happen, I don't know.
Okay. So, we're not in Houston. How bad is it? From you're right there on the ground looking at it, so.
Well, clearly it's been a devastating event. As you travel throughout the area, there were many roads that were closed due to high water. Those are starting to reopen and have, for the most part, reopened. But everywhere you turn are significant piles of debris, many damaged homes and businesses. For example, in Rockport, which is northeast of Corpus Christi, that town was completely decimated. When we were there a couple of weeks ago, only 2 businesses remained open. I'm sure there are more now that have reopened, but the damage was significant and widespread, and it's not going to recover for some period of time.
Okay, well, that's unfortunate. I'm glad that you guys are there to help. So. Now, most of our viewers are generally interested in business type services, which obviously is what I didn't know that that you guys had loans for private individuals until just recently when we started researching before this call. And so since you say that's about 80% of what you're doing, why don't you talk a little bit about what resources or loans are available to homeowners? Like who qualifies, what do they get, that kind of stuff.
Actually, let me just kind of go walk you through the programs, and it all begins with the process of actually applying for all types of federal assistance. And whether you're a business owner or a homeowner, you should register with the Federal Emergency Management Agency by going online at disasterassistance.gov. The registration really is the key that unlocks the door to all of the federal and state programs that are available or may become available as time goes by. As far as homeowners and renters, most of the individuals that register with FEMA will be referred to SBA for a low-interest loan. And the reason I say most homeowners will, we have a mechanism to identify those that are on limited fixed incomes who probably won't qualify for an SBA loan. And remember, these are loans. They do have to be repaid. So rather than put those fixed income or lower to moderate incomes through the process of applying for an SBA loan, we can identify those people right away and give them what's called an expedited referral back to the Federal Emergency Management Agency to their other needs assistance programs, which is a grant program, and that's the program that would most likely be of assistance to them. For those that we think may qualify for a loan, then we ask that they complete their application by one of 3 ways. They can come into a disaster recovery center and apply online with the assistance of our customer service representatives, or they can do that online at home or at any place where they have an internet connection. It's a fairly intuitive application, and they would be able to do it without our assistance, although by coming in to seeing us, they can have a lot of their question answered that they may not understand or just want some clarification on. And the third way is the old-fashioned way. They can request a paper application, and we'll mail them one, and they can fill it out and return it to us. That's probably the least efficient way to do it. It'll take longer, and it's just better to do it online. Now, for all businesses that apply or registered with FEMA, they will all be referred to SBA for a low-interest loan because FEMA does not have any assistance programs for businesses. So SBA is going to be their source of money for the long-term repair and replacement of their damaged assistance.
Okay.
Once we get an application from a homeowner or a business, we'll conduct a loss estimate so that we know how much to process their loan for. And then it goes into what we call a three-step process. And the first step, of course, is apply for the loan. And then step two, we verify the losses, come up with a cost estimate, what it's going to take to restore that business or homeowner back to its pre-disaster condition. And at this stage, after we get an estimate of the cost that it's going to take to restore it, it's assigned to a loan officer for processing who will determine whether or not we can make a loan to that individual or to a business. Assuming we can make a loan to that person, step three is to close the loan and then disperse the loan. And we disperse disaster loans much like a construction loan. We do it in increments over a period of time to match the pace of construction. We do that for two reasons. One, it holds down the interest cost, and two, it allows us to exercise our fiduciary responsibility, make sure that the funds are used for their intended purpose. Now, the nuts and bolts, what can someone get from SBA? Well, for businesses, SBA can provide up to $2 million to repair or replace real estate, machinery and equipment, inventory, or other business assets that may have been lost in the disaster. For the program that's available only to small businesses, SBA has what's called an economic injury disaster loan, and that's a working capital loan. It provides cash money to the small business so that they can pay their ongoing obligations that the business would have paid had the disaster not occurred. And that loan is also available up to $2 million as well. And it can be made available to a business whether or not that business has suffered any property damage or not. Oftentimes you can find a business that had no damage from the storm or the hurricane, but their customers were all impacted and nobody's spending money at their business, but they still got to pay their bills, as you all well know.
Right.
So that loan can be made with or without property damage. The combined amount of the loan to a business cannot exceed $2 million.
Well, let me, if you don't mind, I'm going to jump in with a few questions. So just to go back to the beginning, we started off with loans for homeowners. You said some people won't even qualify for that. Is there a general range where someone would know that it won't qualify? Is it based on their personal income, and does it have anything to do with their amount of debt, or is it simply personal income?
No, it exactly has to do with income and debt. We are strictly cash flow lenders, whether to homeowners, to renters, to businesses, or to private nonprofit organizations. We only make a loan that someone can repay the loan through cash flow. And that's based on a determination of the applicant's financial condition the day before the disaster. So, we don't make a decision on whether or not there's enough equity to secure the loan. Somebody could own a building free and clear, but if they can't cash flow the loan, then we can't make the loan.
Right.
But on the same token, if someone has a building that's 95% encumbered, but they need $150,000, we'll still make the loan even though the equity won't secure the loan. We just ask that the borrower pledge whatever collateral is available to the extent that it's available to secure the loan.
Okay, so how do you determine if someone is able to repay the loan? What ratios are you guys using? Let's start with just the homeowners and then move up to the different classifications of business owners.
Well, we don't use any particular ratios where it's hard and fast. We look at each loan application individually and base our decision whether or not that individual, through cash flow and a history of their credit analysis, indicates that they can and will repay the loan. Do we look at starting points? Sure, but we have much more flexibility than what a private sector lender would take. For example, a bank. If the normal lending is 35% of monthly allowable fixed debt, we often exceed that, or 40% or 45%, sometimes higher than 50%. It just depends on the income and the debt of the applicant.
Okay, what about credit ratings? How much does credit rating come into play?
Well, we look at credit and we look to see whether or not that applicant has a history of paying their just obligations in a timely manner. But when we look at credit, if we see some bad credit, look at the reasons why the bad credit occurred, and then make a judgment on whether or not that's a reasonable explanation. For example, if you're a homeowner on a moderate income and you've got a car payment and your son broke his leg because he fell out of his tree, and you paid the doctor bills rather than the car payment for 1 month, that's a pretty good explanation of why you were behind a month or two on a car payment. So, we ask those kinds of questions. But someone with numerous collection accounts or numerous 90-day late pays, those are going to be much more challenging to get over, and in those kinds of cases, we probably won't make the loan because of poor credit prior to the disaster. And remember, everything's predicated prior to the disaster. We know that people are going to be behind on some payments after the disaster simply because they're probably spending every bit of disposable income to try to make their homes livable so they can move in, or maybe they've had to temporarily stay in a hotel and they got behind on their bills.
Right. Okay. So would you say a 650 score in general is sort of a minimum? Based on how you described it, I wouldn't imagine somebody being much worse than that and fitting that criteria. Or do you even look at the score?
We look at a score as a starting basis, but I'm reluctant to say what that particular score is because, again, these are not cookie-cutter loans. They're individually taped individual. 650, that's in the ballpark. Yeah, we would make a loan on a 650 credit score, assuming that all other things were, in line to be able to make that loan. If it's on a very thin repayment schedule, there are judgments that we make. But here's the thing. If someone thinks they have a bad credit report so they won't qualify for a loan and they don't apply for a loan, they've already got their answer. They know what it is. They didn't apply. The answer's no.
Right.
But if they submit an application, at least that gives us an opportunity to look at it, ask some questions, and determine whether or not there's a basis upon which we can find to make the loan.
Okay. All right. So let's say somebody qualifies for a $100,000 personal loan. Do they need to own a home, or no? They can be renting.
It's number one. It's not a personal loan. These are real estate loans that are paid to repair or replace damaged homes, damaged primary residences, and we do secure those loans with collateral that is available. So we take those loans as collateral. Now, there's two kinds of loans for individuals. One's the home, that's the physical loss of a primary residence. But you have renters that either rent single-family homes or rent an apartment. They, too, have lost personal property. So we can make a loan up to $40,000 to both homeowners and renters to repair or replace the personal property that they've lost.
Okay, so even if they don't own the home, they can get a loan if they're a renter to replace personal property.
That's correct.
Okay. And then how many years is that loan, typically? Or is it a range or is it fixed?
The terms can go up to 30 years. Typically, they are either a 15-year term or a 30-year term.
Okay.
But we do have some flexibility, but the maximum term is 30 years. In most cases, the interest rates on the loan are going to be 1.75%. There's no application.
The entire interest rate is 1.75%, or is it 1.75 over prime?
No, that's 1.75. That's the fixed annual percentage rate.
That's pretty good. God bless Uncle Sam.
Well, it's pretty good.
That's a good rate.
You got to remember, though. Well, the interest rate's very good, but you're asking somebody to pay for the same thing twice because they've already paid for the home once. Now they're borrowing to repair it, and so they're paying for it again. So it's a good interest rate. So yes, it makes it. It gives us a powerful tool to try to make loans that other lenders can't make. Combined with the low interest rate, the lack of collateral-based lending allows us to go where private lenders won't go. So, these are pretty powerful tools to make loans that others won't make.
What's the processing time? How long does it take once you get documents submitted to approve and fund the loan?
Because of the unprecedented activity brought on by Harvey and now Irma and potentially Maria, we're probably looking at in the neighborhood of about 4 weeks.
Okay.
4 weeks to fund?
From the date we get a completed application to a date we can get a loan decision, and then once the loan decision comes down, then of course, just like any other real estate mortgage, people will have to close their loans. So once we send the loan closing documents to them, if they come in and close the documents the day they get it, we'll order the first initial disbursement check for them within a few days. Typically, that's 5 days after the closing. But if somebody sits on the documents for 60 days, we can't do anything. So a lot of that's in the applicant's ballpark.
Right. And you're looking for 3 years financials. Is there a time in business requirement or 3 years tax returns, year-to-date P&L, standard SBA loan?
Well, what we're looking for is the business had to have been in business at the time of the disaster, and it can't be a hobby business. It has to be a full-fledged business. Yes, when we're looking for 2 years of tax returns on businesses, and if we can get them a year on a homeowner or a renter. We have the ability to get tax returns directly from the IRS, but if those are transcripts and they don't show the kind of detail that we sometimes like to see on business tax returns, particularly corporations with a lot of affiliates or things of that nature. But on a business loan, we would be looking for, profit and loss statements, scheduled liabilities, monthly sales history, your basic general financial documents. Now, we understand on some, what I'd call a mom and pop, they may not be that sophisticated and have all of that.
Right.
But as long as we got the tax returns, we can work with them.
Okay. I'm in the thick of an SBA construction loan right now, and so for when you fund those, you still need all of the regular information from the contractor, like their W-9 information check, so that you can disperse the funds directly to them. You need a full bid, and you need equipment quotes and the whole 9 yards?
Yes, no, and maybe.
Okay.
Sometimes we'll need full construction plans from a contractor. Other times it may be the damage does not require significant contractor's plans, but we may need a contractor's estimate, for example. No, we don't get into W-9s and all of that. These are different than SBA 7A guaranteed loans. These are these are direct federal loans that require no participating bank involvement. They're funded directly out of the Treasury by the taxpayers. When we fund a construction loan, yes, we want to see a contractor's estimate, because we'll use that to kind of marry up with what we've estimated the repairs should cost. And oftentimes those numbers are pretty close, and sometimes they're spot on. Sometimes there's some differences. Other times they'll include things like code-required upgrades that are eligible under our program. So the documentation, generally speaking, will require a contractor's estimate. Sometimes, depending on the project, it could require engineer's plans. Other times, it can just be a simple, very modest repairs that may only cost $15,000. So, the documentation won't be as stringent. You should all know, though, that we often go out to properties for a progress inspection to make sure that the construction project that we funded is actually taking place and doing what it was supposed to do. We may not do that on every single property, but we do that on properties at random.
And is there an equity injection requirement?
Sometimes there can be a prior injection requirement, and that's if the project, let's say we funded a $500,000 business repair, but the owner decided he wanted to expand it by adding an additional 2,500 square foot room for a different product line. We can do that, but we can only cover what was lost in the disaster. We don't cover business expansion, but it may make sense during the repair process to go ahead and build that expansion out, but we would make the borrower pay for that first by prior injecting, and based on the contractor's estimates and plans, we would know how much that is. So let's say that was another $50,000. Before our loan of $500,000 would kick in, that owner would be required to put in $50,000 of his own money to cover that additional cost.
Okay, so if we had a client in your area whose business was booming right now because they're some sort of construction and they wanted working capital, they could not get a loan from you guys through this process.
Well, if their need of working capital was a direct result of the disaster because of a lack of capital coming in because nobody's spending money, yes, but if it's booming, as you say, and they just need a working capital because their business is growing, that would probably not be eligible under our program because we can only cover the working capital needs necessary to keep that business viable and in business and to pay its ongoing obligations, not expand its business.
Okay, and when you think about those costs, do you leave it up to the client to tell you what they think it should be and then sometimes you revise it down? Or do you guys just do your own determination for the exact amount and offer it after they apply?
Well, both and all of the above. We do our own analysis to determine what the economic injury is and what the needs are. We do what's called a needs analysis. How much does that business need? It doesn't cover lost sales and it doesn't cover lost profits. Generally, a business owner will give us an estimate. Sometimes they're right on, sometimes they're way off. But we work with each business owner to determine exactly what they need to make sure that we're covering everything that they need to stay in business, because it does no good to only kind of, half fund it.
Right. Now, we work with a lot of people who invest in residential properties to rent them out. So if I had someone who owned 10 residential properties, 5 of them were flooded and they didn't have flood insurance, why that would happen, I don't know. But let's say it happened. Is there any sort of assistance they could get for that, or are they exempt because they don't live in the home?
No, if it's a qualified business rental property, what someone has 10 or 50 single-family residences that they rent out, those are considered business loans, and they are eligible as long as it is a business as identified on their tax returns.
That brings up a good point. When you're looking at real estate, maybe the person bought it 10 years ago, there hasn't been an appraisal on it for 10 years, and now it's destroyed. How do you estimate the value of the property?
Well, we have a number of different outside third-party sources, county clerks, we look at comps in the area, but we're looking at not what the value of the house is in terms of rebuilding, but rather what it's going to take to repair the house. And then we try to figure out in the neighborhood located what the current fair market value is through property tax assessments or local assessments or through local comps, and then we know whether or not that will, help secure the loan or not. It just gives us an idea what the equity is in the property.
Do you require that they have flood insurance on the property in order to get the loan? And what happens if they now cannot get flood insurance in a specific area?
Well, anytime we make a loan to an individual or a business that got wet from a flood, whether it's in a flood zone or not, our policy is, number one, if it's in a special flood hazard area, then by law they're required to have flood insurance on the property. If they're outside of a special flood hazard area, but we're making them a loan because of a flood, then we will, as a matter of policy, require them to maintain flood insurance on that property for the life of the loan. If 5 years from now they've let that insurance lapse for whatever reason, they would be considered in default of the loan agreement, and we would not make them a future SBA disaster loan on that property because they did not comply with the terms of the original loan agreement.
So if someone can't get flood insurance, they're not able to get a loan. Do you happen to know if there's areas where they're not going to rebuild at all? Sort of blackout areas?
I haven't. It's early in the disaster. We are not aware of any particular area where any local authority has said, no, you're not going to be allowed to rebuild. If they're not going to be allowed to rebuild, we can still help them by making them just be under the relocation aspect of the program. So we can do loans for relocation properties if a local authority says, nope, we're not issuing a permit to build, you're out of here.
Okay, but let's say somebody had investment properties, but their credit was 550. So you're not going to be able to help them because they're below the margin, even if they have a lot of equities on the property, right?
It depends on what you're talking about. An investment property, if it's a spec home that they were built on spec, no, we wouldn't help anyways because that's a speculative venture.
Right. I just mean rentals. They own rental properties, kind of like the example I gave before.
Well, again, we would look at the individual's credit and determine what the reasons are for the bad credit, and then make a decision on that.
Okay. And where are these decisions happening? Do you have a number of different processing centers? Where in the U.S. is it actually happening?
Typically, our processing and disbursement center handle all applications that come in nationwide, and that's out of Dallas-Fort Worth. However, in this disaster and now Irma, we've opened an additional processing center in Sacramento.
Okay.
And is the process the same? I know that you have several disaster areas. I saw there was one in Hawaii. There's now one in Illinois. The process is all the same. The underwriting criteria is the same no matter what the disaster area is. You got, I think, about 70 disaster areas right now on the SBA site.
That's correct.
Okay.
Yep, that's correct.
And as long as the disaster is listed on that site, they're eligible to apply for a disaster loan. But if it's not listed on that site anymore, let's say it's aged out or no longer qualifies?
Depends on the age of the applicant. For example, we have a typical 60-day filing period, and I'll use Hawaii. You mentioned that one. That was for the Marco Polo fire for the building in downtown Honolulu. I assume that's what you're referring to. Mm-hmm. That's a 60-day filing period. If somebody comes to us 65 days from now, so they'd be 5 days late, we would probably accept that application. Okay, you just missed the filing deadline. But if they came to us 90 days from now, we would ask, well, why didn't you file within the 60 days? And we would be looking for reasons that are substantially beyond their control as to why they didn't apply. If they said, well, I forgot, that's not a very good answer. But,
right.
Hey, I was working out of the country for the last 3 months, and I just heard about this program being available when I got back to the States. That might be a reason why we could extend that and extend a late application to them.
Right. At the risk of focusing too much on construction, I'm imagining someone who thinks they can kind of carry the cost of it. They don't want to do a loan, and then eventually the burden becomes too great, and they realize 6 months later, I really need this extra finance because I was so impacted, probably more so than I thought from the disaster.
Yeah, 6 months out would be a very difficult. It would be difficult to convince us to accept a late application at that point in time. Particularly when we tell everybody up front, look, apply now. If you decide you don't need the loan, you can cancel it. It doesn't cost you anything to cancel. It doesn't cost you anything to apply for the loan. But if we approve it, you've got it available to you. If it turns out you don't need it, you don't need it.
Okay. Good. Awesome. Well, that's a lot of good information. Do you have any additional questions, Bella?
I think that's pretty much it. Do you have anything else that you think is critical to get out, that you see a lot of mistakes small business owners or people making that you want to clarify, or rumors that you need to set straight?
Yeah, let me. The number one problem that we have in reaching our audience is that because we're the Small Business Administration, homeowners will get an application from SBA and wonder, I don't own a business. Why in the world did I get an application from the Small Business Administration? It's counterintuitive. We understand that. It's something that we fight every day. So tell your homeowners and renters, or your business owners that own homes, that we do in fact have loans for homeowners, and we're the primary source of money for them as well, and to go through the application process. That's the number one thing you can tell them to do, and the number two thing is tell them to register for assistance at www.disasterassistance.gov.
What's the budget on this disaster that you have funds to disperse?
I don't big. I don't. We don't know what it's going to be at this point, but we're making every loan for every application that we're receiving that can be approved. We're already approaching $350 million in loans approved so far. We've approved several thousand loans, and that number is going up by millions every day.
So maybe give us some examples of people that would or would not qualify. I mean, are there some types of damage that do, and then some that don't qualify on a building? Or is it literally anything?
Well, for example, renters, we don't, or homeowners for that matter, we don't cover things like luxury items, fur coat. We don't do recreational vehicles like a boat, unless, of course, that boat was required for you to commute to your place of business. Maybe you live on the water or on an island and you commute to the mainland every day, something like that.
What about computers?
We don't cover lost. Yeah, we don't cover lost cash. If you had a computer, that's personal property. We cover that.
Okay. And then you mentioned something about nonprofits, so churches would be covered as well?
Yeah. Churches, private schools, other private nonprofit organizations that have been physically impacted, we can cover those, sure.
And if the building had been in a fire or something prior to the accident and now is looking to maybe capitalize on this opportunity, is that okay, or it has to be?
The damage has to be the direct result of the declared disaster. So in Hurricane Harvey, if for some reason the electrical shorted out and caused a fire, that would be eligible. But if prior to Hurricane Harvey, somebody knocked over an oil burning lamp and burned, half the kitchen up, that would not be covered.
Okay. Are you seeing much coming out of Florida? Obviously, we've been talking about Houston, and I know you are there, but what are you seeing in Florida? Is it how does that compare?
Well, you're right. I am in Houston, and I've been focused solely on Harvey. That's in my territory. My territory covers everything west of the Mississippi. We have a mirror office in Atlanta that handles everything east of the Mississippi. But as you can imagine, we're seeing the same reports that you all are seeing. Florida took a direct hit from a Cat 5. The Florida Keys have been decimated. The Virgin Islands and Puerto Rico were heavily damaged. And now with Maria right at Puerto Rico, that's going to make that whole situation even worse. There is a lot of damage.
Are these loans available in Puerto Rico and the U.S. Virgin Islands?
Yeah. Yep. As well as Florida, and I believe Georgia and maybe South Carolina, but don't quote me on that.
Okay.
How much extra hiring and training do you have to do to process all this within a month? That also seems like a daunting task on a SBA side.
We are. If you know of anybody that wants a job as a loan officer, as an attorney, as a paralegal, as clerical support, public information officers, have them get in touch with us. On the website, there's a link to jobs for Harvey and Irma. We need a lot of people, and we need them rapidly. However, tell them if they want to apply, be prepared to work 12 and 14 hours a day, 6 and 7 days a week for weeks on end.
Great.
There
Wow.
you go.
Okay.
Kind of like a
Excellent.
small business owner.
Yeah, like all of our clients.
It's not unusual for our folks to work 80 hours a week.
Wow. But do
And
they
I'm
need
not-
to be...
And I'm not exaggerating.
No, I believe you, and we appreciate the hard work. Do they need to be in Sacramento or Dallas for that?
Well, certainly in Sacramento, there are loans for paralegals and clerical and attorneys and loan officers. And in Dallas, of course, they have the same needs there as well. And then we also have my office, particularly out of Sacramento as well, needs customer service representatives. And we need dozens, if not hundreds, of those folks. And those are the people that sit in the disaster recovery centers and the business recovery centers and talk to those impacted face-to-face and help them complete the application. That work is extremely rewarding, and people get to see and talk to people firsthand about their experiences and what they're seeing and doing. So, but it's hard work, and it's long days. So tell your friends and family if they want a job and want to make some money, this is the time.
Great. Do they get overtime? Or they? No, we really appreciate the work that you guys are doing.
They do get overtime.
Oh.
We do pay overtime. Anything over 40 hours a week, we pay overtime.
Oh, wow.
And if we travel them away from their homes more than 50 miles, we'll pick up the tab on their hotel. We'll pay them per diem every day so they can eat, and we'll cover rental car and gas if they need it.
Great. Well, good. We really appreciate the hard work you guys are doing, and we hope that you can get home relatively soon as at least you want to. And I want to thank you for coming on and sharing this information. We'll get it out to everybody that we can get it to, and go from there. Rhoda, you have anything else?
I think that's it. Thank you so much. I appreciate it.
You're welcome. Thanks a lot for having us. We'll talk to you later.
You
Thank
bet.
you.
Bye-bye.
Bye.
All right, everybody, and that wraps it up for us. Really appreciate you coming on the call. I hope you got something good out of this. If nothing else, then a shot for a job, right? But if you're in the affected area and you're looking for financing, now you know how to do it. We'll be putting our own team together in order to help direct people through to the resources in order to get everything out to as many people as possible. So thank you for coming on to our training. Look for more emails to come out with more information. We'll be doing more interviews over the next coming week with whatever we line up in order to get as much information out as possible. Thank you, Rhoda, for coming on. Thank you all for everything you do, and we look forward to doing a lot more deals together.